So in 2001, which was 10 years ago, and I can't believe it was 10 years ago, it just seems like yesterday, James Hardie had moved into the US to the housing market. Most of their profits were generated, over 80%, and they were paying a lot of double taxation because most of the shareholders, or nearly all of the shareholders, were in Australia. So you've got the profit-making entity in one jurisdiction, the shareholders in another, you're repatriating profits, and if anybody has ever held shares in a foreign entity on a foreign exchange and they pay dividends, you need to pay what they call withholding tax, and then at the end of the year you can recoup that, but for the time you're actually being double taxed. It was unattractive for shareholders, this double taxation issue. It was eroding their profits, and of course companies have a responsibility to their financial risk takers, which are shareholders. Also, at the same time, there was an increase in the size of claims and settlements. Now, once asbestos was only like for workers' compensation, so if you had worked in their factories and developed asbestos-related disease, you'd be paid by workers' compensation. They ceased that manufacture in early 1980s, so most of those workers are now old men basically. The biggest problem was you were getting the general population who hadn't worked in the factory developing what they call this mesothelioma, this cancer, and because it can only be caused by asbestos, you had the problem that you would find, say, somebody who was 30, who was maybe a specialist, like a doctor who was a specialist, who was being compensated for lost wages for the next 30 years at, you know, how many thousands of dollars a doctor will earn. And so those claims were increasing and increasing in size and number. So the problem of this liability, or this litigation liability, was becoming quite unwieldy for them. The company had tried to list in the US, but these asbestos liabilities that they had, and these increasing, this long tail liability, this risk and uncertainty, was one of the things that made it very unattractive as a risk, as an investment in the US, and especially because under US requirements for accounting, you have to disclose your contingent liabilities in your subsidiaries as well, which wasn't the case in Australia. So what they did, they decided that they would have a separation strategy and that they would move their liabilities into a separate legal entity, which was a medical research and compensation fund, which would be solely there to pay compensation to the asbestos liability claimants. So multiple corporate restructure. Remember we were talking about subsidiaries and parents and how the parent company does not have to pay the debts of the subsidiary. It's a separate legal entity. So what they did there is they separated those liabilities made a separate company and put them in that company. And whatever happened to that company wasn't going to affect the parent or the operating profits. So they had multiple goals. One was to quarantine the asbestos-related liabilities from their profitable operating activities, to allow the listing on the New York Stock Exchange, and later on they actually moved to the Netherlands to prevent this double taxation issue. And it would also provide a certainty in the respect of the size and timing of payments, because they knew how much was in the medical compensation fund, and once that had run out, then that was it, there was going to be no more.